Morning traders, and welcome to the official first day of trading in September. US traders were out last night on Labor Day holidays, but they are back today. September is generally a bearish month for US equities. Historically, for the Dow, September has always been the worst month. Last 4 years, we actually had S&P also trade or finish September in the red. Now look, retail traders certainly are going into September bearish. We have retail net positioning at 80% net short going into September. So look, that positioning does worry me a little bit, just for the simple fact that it is so extreme, and generally the market doesn't like everyone to make money at the same time. So maybe the market might need to spike up a little bit and take out some of that weaker positioning. Before maybe we go lower later on in the month. But certainly, if you are looking to short, potentially there will be better levels. Okay, so tonight we have actually some very important economic data. We've got US ISM manufacturing data. In July, this data came out well below expectations at 46.8. It was a terrible number, and it started to give the market second thoughts about soft landings and whether or not the US economy is rolling over towards a recession. So tonight's number certainly will be closely watched by the market. And for the August number tonight, we're actually expecting manufacturing print to actually come in a touch higher in July, so around about 47.5. But look, that still is in contractionary territory. It is below 50. And look, the market will react on this number. So look, if it comes out better than expected, no doubt market will rejoice. We'll see bond yields higher, and also on the back of that, we'll probably see some broad-based US dollar buying. However, if we do see this number come out below expectations or down near where we saw that number for July, certainly that's going to market's going to start questioning exactly where the US economy is and whether or not it is slowing down. No doubt then we'll see bond yields fall, and we'll see a sell-off in the US dollar. But certainly expecting some market reaction on this number tonight. But the real event risk for this week, we're going to have to wait until Friday for the release of the US non-farm payroll, so the employment numbers in the US. The market's focus has shifted away from the inflation numbers. The market's confident that the inflation now has come down towards the Fed's mandate, down towards 2%, where the Fed can start cutting rates. What the market is now focused on is the slowing employment data. In the last year we had unemployment sitting below 4%, but in the last few months it's actually spiked up above 4%. So we've seen coming at 4.1, and the actual last employment number we saw spike up to 4.3%, which has started to concern the market that employment is slowing. For the number on Friday, we're expecting the headline number like 165,000 new jobs added, with the unemployment rate actually dipping back down from 4.3% to 4.2%. No doubt if we did see an employment report come out on expectations, I think the market will be quite happy with that. But certainly if we did see the unemployment rate stay around 4.3%, and if it actually did go higher, I think there'd be a lot of calls that the US economy now may be headed towards a potential recession, and calls for a Fed rate cut of 50 basis points in the September meeting, which is coming up on the 18th of September, will certainly grow a lot louder. But certainly if the unemployment rate does come down towards 4.2% or maybe even lower again, I think then the market will cheer those numbers. Okay, so good luck with your trading, and we'll check back in shortly.